You have a fairly neutral view on Japan. Better governance is something that many people have talked about. Where does that stand now? Goldman Sachs putting out some data saying hedge funds sold stocks in Japan at the fastest pace in more than 5 years last week, and we certainly saw the negativity at the start of the week.
I may have become a bit more positive because the Bank of Japan, of course, last week basically said we won't raise rates while there's market volatility. That's a put. They've just reintroduced a put into the market. So actually, I think Japan is actually pretty well supported. And on the yen, of course, cheap yen, good for Japanese stock market because of those exporters. And actually, I think the death of the carry trade is being called a little bit prematurely. And I reckon that will reinforce itself and also support stocks. And the reason for that is actually there's very little inward investment. This is the story that people aren't covering. There's very little inward investment into Japan. The net inward investment rate is 5%. It's the same as Burundi. It's extremely low. And that's why there's very low demand for yen. That's what's underpinning the carry trade rather than what's happening with the macro, what's happening with the interest rates and what's happening with the inflation.
So even with all of that excitement about the Japanese story of late, still those low investment
I think
levels.
It will reassert itself. And also improving corporate governance in Japan means that Japanese companies are actually investing abroad a lot more. So again, less demand for yen. So these are structural reasons that are actually underpinning the Japanese stock market.